Sometimes Forex trading is a wild and woolly place to be. That's why Hugh's here, to pose your questions to Walter, the naked Forex guy. Hugh's got questions, and Walter's got the answers. Here at the Truth About FX podcast.
Hey Walter, another listener wrote in, and they're saying that they're reading the 15 to 240 minute Forex charts with Elliott Wave, and they're trying to improve their win rate, I guess they're trying to say here, and they have a small account, and they want to know how to avoid intraday trading and not watching the market so much.
Yeah, right. So this trader is using Elliott Wave, that's cool, whatever works for you, and the strike rate's going well, so high win rate, that's excellent, but you don't have a lot of money to trade. Well, here's the thing that I think, because this is a good question, because this person is aware that it may not be a good idea to get sucked into the lower time frame chart. So here's what I would say about this. Maybe what you want to do here is you simply want to go ahead and change brokers to a broker that will allow you to take really small positions. And so there are brokers that allow you to change your lot sizes so that you can trade at 3 cents a pip or 13 cents a pip or 43 cents a pip or whatever it is, instead of having to trade for $1 or $10 a pip. So this is something that people forget, that they feel like they're stuck, that they have to trade, a mini lot at $1 a pip, or a standard lot at $10 a pip. There are micro lots at 10 cents a pip, but even beyond that, there are brokers that will allow you to trade at 2.5 cents a pip or whatever. And these are the sorts of brokers you need to look for, because otherwise you're going to make a really poor risk management mistake, which means that you can have a great system that falls apart because you run into a massive drawdown because your position size is too big. Or even worse, you could have that situation where you have to decide whether to risk too much or too little on every single trade, and you might get unlucky and you risk too little on the winners and too much on the losers. So, these sorts of things people don't think about, but the risk management is really, I really don't know how to I don't think you can overstate it. Risk management and the psychology behind it is probably the fastest path to your trading goals, is to work on risk management. And the easiest way to do this correctly with a small amount of trading capital is to make sure that your broker that you're using allows you to trade in any lot size you choose. So that would be my advice, and I know it's probably a bit dry and maybe not what you're looking for, but the key here is risk management. It really is. I mean, this is where it's at. There's a link underneath this episode in the show notes where you can click on that calculator and work out exactly how much you can risk so that you don't hit that drawdown that you think will freak you out. And so some people it's 20% or 15% or 30% or whatever it is. Use that calculator and figure out, given your system parameters, how much you can risk per trade so that you don't run into that, so that you're very, very unlikely to run into that drawdown that will ruin you, and then get a broker that allows you to risk exactly that amount, and you'll see a big difference in your trading. I promise you. I just want you to keep in mind that it's risk management is the tool that allows you to get to your trading goals, and that's something that I think a lot of people miss. So it's a great question, and I'm glad that it came up.
Oh yeah, that's awesome. Off the top of your head, do you have any brokers in mind that would allow that kind of trading?
Yeah. You can go to Awanda, right? Awanda will let you do that. There's actually, I think, also a link here where you can look at many different brokers who will allow you to do that, and I'll put that in the show notes too for you. So basically you're looking for a broker that allows you to set up odd lot sizes and things like that. So you're not limited to micro, mini, or standard account or standard lot sizes. But Awanda's pretty cool because it actually will tell you the amount of money you're risking. So let's say you have a $10,000 account and you want to risk $100. Well, Awanda will tell you as you adjust the lot size, it'll say that your stop loss is $101 away or $99.98 away or whatever. So that's really cool in their platform that it does that for you. So that's something that you should have a look at if this resonates with you. Yeah.
Oh yeah, for sure. I love that. I use Awanda too, and I love that feature.
It's excellent.
All right.
Thanks, Hugh.
Thanks, Walter.
Thank you.